Okay. Hi there. Thank you so much for joining me today. We're going to be talking about the basics of student loans or Student Loans 101. My name is Soka Yus, and I'm a financial wellness counselor here at Mayo Employees Federal Credit Union. And today so this is my contact information, my phone number, and my email. So if you can please take that down. If you have any questions during the presentation, please just type in the questions. And if you have some questions afterwards, more personal questions, you're more than welcome to reach out to me as well, and I'll be more than happy to get back to you on that. And so the agenda today, we're going to be talking about how to pay for college, federal student aid, FAFSA, when and how to apply for it, identify your student loans, understanding repayment options, and prepare for repayments. So first things first, paying for college. So there's college savings plans. We do have a 529B plan here that's available, but also if you're a Mayo employee, they have it available through their employer, through HR as well, your employer. So you might want to look into that to see if you need to, if you have small children, if you need to start a college savings plan to pay for their college. Student loans, we're going to talk about the difference between private and federal student loans, and also scholarships, different kind of scholarships that Mayo Clinic offer, and also our location offer as well at here at the credit union. So first things first, we're going to talk about federal student aid. So FAFSA, when to apply. So before each year in college, students can apply for federal grants, work study, and loans with a free application for federal student aid, so FAFSA. Form. Your college uses your FAFSA data to determine your federal aid eligibility and who qualifies for that. So there's a few qualifications. You have to be, you don't have to be a citizen to qualify for it. You have to be, if you're an older student, if you're over 24, then you have more, you're eligible to qualify for more grants or more aid. And when can you sign up? So usually the cutoff date is June 30th. And how to sign up. So you can go to studentaid.gov and you can fill out the application there. They're going to go over the eligibilities as well. So more in details, the eligibility to qualify for FAFSA. And how to successfully repay student loans. So first things first, you want to identify your student loans. So it's either federal loans or private loans. So federal loans would be NELNETs or the student loans that are currently on pause right now that the government has. Those are federal student loans. And private loans would be loans that you have from an institution or from a credit union. So for example, we have Lenke as our private student loans. And if you have Lenke or you have private student loans, those were not eligible for the pause that's been going on for 3 years. So we want you to, and in order for you to, if you don't know what kind of student loans you have, you can actually go to annualcreditreport.com, review your credit report, and see what it'll tell you on there who you owe, and then you can call them and you can ask if it's federal or private student loans. And you want to prepare for repayments. So how much your student loans are going to be, how does that fit into your budget, how much you can afford to pay, and what you need to. So you might want to prepare now because we know for sure that the pause is going to end on June 30th and then first payments will start October. So I believe it's the end of October for some, but you should be getting letters from your loan service provider to let you know how much you owe when you should start repayment. So you might want to go ahead and start budgeting that into your current budget. And if you need help budgeting, please reach out to me. We can set up a plan together as well. And understand repayment options to see if you know how much of it's, what kind of repayment plans you have with your student loan servicer. And if you're confused about what kind of repayment plan you're currently on before, you can reach out to your student loan servicer to discuss what kind of plan that was before. And learn about the Public Service Loan Forgiveness Program. So we'll talk briefly about that. And again, identify your loans. Go to studentaid.gov. So that's a really great website for anything student loans related. Or you can go to annualcreditreport.com to take a look at your student loans there. You can identify your loans, federal aid websites, studentaid.gov. Which type of loans do you have? Is it subsidized, unsubsidized, or private? And if you have if your loans are public service loan forgiveness eligible, you can go to that website and see if it's eligible. Chances are if you work for Mayo, because they're a nonprofit, you might be eligible for it. So you can log on to HR. So there's a website that you can log on to the Mayo website through HR to see if you're, to fill out that student loan for the PSLF program application. So if you need help with that, please reach out to us and we can walk you through that as well. Identify your loans. So subsidized education department pays interest while you're still in school. So what that will look like is if you have direct subsidized loans, if the principal is, in this case, if you have 3 different loan types, it can have different loan amounts, and it totals out to $3,977. The interest is very, very little on it, and you have by the time you graduate, the balance is going to be pretty much about the same where the loan amount was. If you have unsubsidized, that's undergraduate and graduate or professional degrees, you have higher loan limits. So this is what the loan example might look like here. Or so to understand your repayment options, the standard repayment program, you can repay it back in 10 years. The graduated repayment program, where payments increase over time. So if you're starting out with your graduated repayment program, you're starting out in your position, you may not be getting that much. So it's based off your income, and then once you start making more money, it's going to be based off your income as you start to get more money as well. You're extended, repaid up to 25 years. So if you have more questions about that, you're more than welcome to reach out to your loan service provider and they can walk you through that, or you can reach out to us as well. Understand your repayment options. Income-based repayments are calculated based on your income size, your income and family size. You can do pay-as-you-earn, revised pay-as-you-earn, income-based or income contingent, and more. Understand repayment options. Private loans are not from the government. It's based off the lender's policies and regulations, and cosigner may be required. So cosigner released after meeting requirements. So sometimes if you're still young and you need, you don't have enough credit, or you don't have enough income to get a personal loan, or a private student loan, you may have let's say your parents co-sign for you. So after you graduate from school, you started working, you make your payments as required, and according to the lender's policy, if all your payments are met according to their policies, they may go ahead and release the co-signer as well, so that way your parents won't be on the hook for that, and then it'll just be you to continue with that repayment program. So payment examples, wondering what different loan amounts or repayments type look like. So for example, this is based off $37,000 in student loans, and a standard repayment program will have you pay $394 per month with a total interest paid of $10,000. In a graduated standard repayment program, you're looking at $222 per month, and then the interest rate is going to be variable because it's going to, you're going to start out smaller, the repayments payment will be smaller, and it goes up as you go, so it's harder to calculate the interest paid. Total. In extended repayment, you can start out with $216 per month, but you're going to pay a much larger interest, total of $28,000. The repay program is going to be $350 per month with a total interest paid of $12,000. And if you decide to get a loan with this for a consolidation loan, you might be looking at about $303 per month with a total interest of $17,418. Based off what, it's going to vary based off of interest rate that you get. So that's going to be for the first standard repayment, is going to be for 120 payments for 10 years. So the graduated program, 20% increase every 2 years. The extended repayment program, 300 payments over 25 years. The repay program, that's 140 payments over 11.5 years. And the MEFQ repayment is over 15 years or 180 payments, so 180 months. And then this would be, for example, so the other one was for $37,000, and this balance is for $50,000 of student loans. So you might be looking at 10 years at $530 for a total of $13,600 for standard repayment with that size student loans, and so on. So again, the graduated standard repayment program increases 20% every 2 years. And of course, interest paid is going to be variable, but payments are going to be $300 a month. The extended repayment, that's a 25-year program or payment plan. You're going to pay a total a little over $37,000 in interest rate, but it's it's the least amount that you have to pay each month, so it's $292, and so on and so on. So again, with the MEFQ consolidation loan, with the 15-year repayment program, you're probably looking at about $409, depending on what the interest rate is, but the total interest pay will be $23,538. So understanding repayment options, federal consolidation, you have to understand the subsidized loans or unsubsidized loans, private loan consolidation, if you want to consolidate both federal and both private into one private loan. You can do that too in the repayment program. You can get on 5 years, 10 years to 15 years. You consider multiple options in terms before you commit to these, because remember, once you consolidate the federal loans into private loans, you're losing all those federal benefits. So for example, with the student loan pause right now, or if they decide to go ahead and do the $10,000 or $20,000 student loan forgiveness, you won't be eligible for that if you have private student loans. So it's really important that you weigh out your pros and cons before you make that commitment as well. Understand repayment options, the pros and cons of private consolidation. You have fewer loans to worry about. So you have you save money with a lower interest rate, and that way it's easier for you to budget your cash flow, and you can improve your cash flow with lower payments. And you can also release your co-signers sooner. So if you're have a co-signer when you were 20, and then that person is wanting to buy a house and they want to be released of this large loan that they co-signed for you, and now that you consolidate your loan, you can release this co-signer and they can be released of the obligations. On the cons of consolidation, you forfeit benefits provided by federal loans. So again, that was one of the benefits was the federal student loan pause and the possible forgiveness. I can't afford my loan payments. You can look into forbearance. You can postpone payments, but the interest continues to accrue, which can cause a loan balance to increase. So just be aware of that. And again, go over your options with a student loan service provider. They can help you figure out what's the best repayments program for you according to your budget. Make changes in expenses and lifestyle to better afford student loan payments. And that's going to be a very, very big one coming up here when student loans are when people have to start to pay their student loans again. So it's best that, we get into a good habit of trying to change your lifestyle now to, to cut back on eating out, cut back on entertainment, just so you have enough money to pay towards your student loans coming up. And the pandemic forbearance, the CARES Act, it was forbearance and interest pause effective March 2020. Executive order by President Trump and President Biden. Repayment begins October 2023. So you want to monitor your account. You want to talk about budget. You want to look into budgeting. You want to, if you need help budgeting your expenses, you're more than welcome to reach out to me. We can schedule a time to meet so we can take a look at your budget or create one, and we can include your student loan repayments in that budget as well. So. If you'd like to learn more, you can visit our website at mayocreditunion.studentloans, or reach out to one of our loan officers or reach out to me. And Seth, do we have any questions at this time?
Sorry. Yes. What with repayment going to be likely restarting this fall, or most likely, does it make sense to consolidate right now if you have a mixture of federal and private loans, or what's your opinion on that, I guess?
Yeah, so it's so remember that consolidation loan, applying for a loan might take a little bit of time depending on how much you're applying for or how much you're trying to consolidate. So it's best to go ahead and start excuse me, talking to a loan officer now so they can give you the options of repayments of how much you might be paying back, what kind of interest you might qualify for. Excuse me. And then also it gives you enough time to really weigh the pros and cons of really if you really want to consolidate your federal loans into private loans or not. Because remember, you're forfeiting all those federal opportunities that you have. But also, it's a good time to talk to a loan officer now about it too, because if you currently have a credit card with a high balance on there, and it's going to affect your interest rate when you want to consolidate your loan, so you might want to work on paying off those, whatever debt you have, like the credit cards and stuff, to lower that, so that way you can guarantee a lower rate for your consolidation. So the goal to consolidate is, one, to get it all in one loan, and two, is to have lower interest rate as well. So if you are getting a higher interest rate than what your current interest rates are now on your current loans, then it's not worth it. But at least then, if you talk to a loan officer and you try to, you submit an application, and at least then you'll know what kind of monthly payments you're looking at and what kind of interest rate you're looking at as well.
And just to confirm for people out there, during the CARES Act with the forbearance and interest pause, interest will pick up. When does it start?
I believe
People have been saying that it will start in October when it starts, or it's starting sooner now. Do you know any more about that?
I believe it starts well, no, I don't have an exact answer. So that's something I can look into. But I believe since the payment starts in October, that's probably when the interest starts. But I can confirm that, and we can send out information on that as well when time gets closer. So right now, a lot of stuff is up in the air right now. So when it's more specific questions like that regarding the CARES Act being lifted, we'll know more as we go on, and we'll give out more presentations too, specifically for that, and specifically more for the PSLF program as well. So this is just a more generalized and bird's overview of what your student loans, just the basics of student loans. But when it comes to the specifics of those, the CARES Act and Public Service Loan Forgiveness Program, we'll know more about it once the the court system tell us if we're able to forgive the $10,000 to $20,000 or not, and then we'll go on from there. So we'll give up more presentations, more detailed presentations, and stuff on that.
Yeah, a lot of it's still up in the air. Yep.
Yep.
So
Yeah.
that's all the questions I have.
All right.
Anything else you'd like to touch on?
At this time, it's really important to really know where your budget is sitting at, because a lot of the typical amount of student loan repayments, monthly payments, is roughly $350. So that's a huge chunk for not having to pay it for over 3 years. So it's really, really important that you know exactly how much you can afford, if you can afford other bills, or where you need to cut out in your lifestyle, or if you need to pick up a second job to be able to afford to pay back your student loans. So budgeting is a really important part of it, and also setting financial goals. So if that is something that you really need help with, please reach out to me. We can get together and we can set up a budget plan and how we can repay back your student loans.